Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have with us Nadine Perez, who's the founder of NBP Insurance Services. Nadine, welcome to the program.
Hi, Mike. Thanks for having me.
Hey, you're welcome. I'm excited to talk with you because I always love learning from people with different backgrounds and perspectives and offerings in different parts of the country. So I know you work with a very specific demographic of clients. So I want to learn about what you do, but give us a little bit of background on your entrepreneurial journey up to this part in your career.
Oh, Mike, I was in corporate America for many, many, many years. And as a lot of people go through the same kind of things, you know, you get downsized, things happen, and you just end up changing careers. And I decided that I wanted to work more one-on-one with people. I did get my insurance license and specializing in the Medicare field, which I help a lot of people in the 65 and over area. And then it basically blossomed my business into the financial services area, and I do help a lot of families getting their families financial planning, and most specifically in the college planning area, people who are trying to figure a way to pay for their kids' college.
So one thing that I always listen for clues and things when people are talking, and one thing that I heard was I help and family, and that makes me think of legacy and serving and providing value. I didn't hear you say I'm the top producer and I sell all kinds. No, you are helping and developing relationships, and you're serving your clients, and I think that is spectacular. And it's really interesting that you mentioned college savings, because I think that a lot of people just think, what they're going to college, I pay the tuition and what? But it's a whole world of planning and things you can do well ahead of college. In fact, you clarified this, but when should someone plan for college? Not as a sophomore in high school. It probably begins like in middle school to start planning that way. And then the same kind of mindset is, okay, now let's think about the same planning aspect when you're thinking about retirement. So bring us up to speed on some saving for college tuition strategies that you work with your clients on.
Well, you know, it's funny that you asked that. Mike, did you know that today the average age of first-time parents is 31 years old? So when you add 18 years plus 4 years of college, that's bringing your parents up to age around 53 to 58 years old. And if you add one or two additional children in the mix, that's now bringing your parents to the age of 62 to 66 years old. Mike, there is nothing of greater impact to their retirement than to send their kids to college. And yet, there's no greater gift that we can give our kids but an education and a great start to adulthood.
That's I think you logically know what you just said. People will go, yeah, that's true. But then when you start doing the 31 plus and then another kid, and you're like, oh yeah, because so many times people feel like I either can't help with your college at all whatsoever, or I'm going to try to pay it all on my own, and then you're derailing your own personal retirement. And guess what that does? It might mean that mom and dad are living in the kid's basement because they don't have retirement because I put you through college.
Absolutely.
We kid and we jest, but when you start working with a family that says, Nadine, what should I be thinking of? My child is whatever, middle school or starting high school in a few years. What are some of the things that you are looking for first to make recommendations to the parents?
Well, see, this is what I do. I work with my clients and their students to maximize their eligibility for the most financial aid that they could get for their specific situation. You know, a lot of people don't really understand what financial aid is. The U.S. Department of Education Office of Federal Student Aid comes up with a formula calculation that determines, based on income, assets, non-retirement accounts, 401k contributions, everything that is not only in the parent's name but in the student's name, and they come up with what's called the expected family contribution. Now, this is the amazing thing. The EFC, or expected family contribution, is a number that the U.S. Education Department determines that the family can afford to pay, whether they really can or not.
Yeah.
That's what they're saying they can afford to pay. And then there's another component, the cost of attendance to a school. So when you take the cost of attendance minus the expected family contribution, there's still what's left is what is considered the need. And there's different ways of handling the need. Some schools, most of the schools, well, basically financial aid is a way of handling the need. It's a discount from the school that reduces that need. And there are some schools that offer 100% of the need. There are some schools that don't offer anything. But what's important to remember is that at the end of the day, there's going to be a bill that's going to have to be paid. Yeah. And that's where I help my families to develop a blueprint for, number one, how to reduce their expected family contribution and how they're going to pay the difference in the most tax-efficient way or, if necessary, interest-efficient way.
Yeah, and I think that's a big point to think about, because when you start hearing of expected family and calculation and what's left, you're just like, okay, I'm done, I'm lost, please help, so guide me. And exactly. I think that's a really, really important piece to think about, is you need someone that can know the ropes, navigate through, give you some guidance. So you mentioned tax favored or tax savings, and I think that's a big thing that people are thinking about is, what about all of my, my income, my bucket where there's holes in it going out? Well, that's expenses. Yeah, you have to keep an eye on that, but also taxes. So how do you work with your clients to help them get more and more savings for college or retirement and be tax efficient?
Well, that's a good question. Let me ask you this, Mike. Do you think the taxes are going to go up or down?
I will say most definitely, and I have no clue, I will say, in my uneducated opinion, up, and probably a lot.
Yes, definitely.
Yep.
And beyond taxes, there are other factors that individuals need to consider in retirement planning. Longevity, rising cost of health care, and market risk is chief among them. And with all of these factors in mind, it's best not to focus on how much money you're going to have in retirement, but how much they're going to keep. I love this simple farming analogy that I usually talk with. If you were a farmer, would you want to pay taxes on the seed or on the harvest?
Yeah, on the seed, because it's the beginning.
Ironically, the most highly utilized retirement saving vehicle tax on the harvest.
Wow.
And that leaves most people who've saved so carefully with a lot less than they were expecting. And then, of course, adding inflation and the cost of living at retirement age and health care. And some of the worst things that I can't stand is all those Medicare commercials that are fraught with misleading information leaves people to wonder, how much is my health care going to cost when I retire?
Yeah. And what's interesting, you mentioned the commercials and misleading. I think it's really anyway, but people need to realize, just because you see a famous actor on a TV commercial doesn't mean that whatever they're promoting is just take it with, blindly, that it's perfect. You need to investigate it yourself. And I think that's a really big point people don't realize.
Exactly. There's so much misinformation there and so much that's left out.
Well, if you are now finding some ways to make sure that you have the right guidance and financial coach like yourself to maximize your money and minimize taxes, you can never eliminate. But what about how you can get that college tuition or increase your financial aid? Are there some specific strategies that you recommend for your parents, that the parents and the child, as you work with them, for making sure that you are fully prepared? We're polishing up on the taxes side, but what about maximizing that financial aid?
Well, that's a very good place to start. First of all, we need to figure out, and I work with the students and the parents together to figure out what schools are their children most interested in. And let's consider that at the end of the day, we're talking a bachelor's degree.
Yeah.
A bachelor's degree that they can get anywhere. It's funny because I spoke with a dad a couple of weeks ago. His son wanted to go to a big school, big school. I asked him, why does he want to go to big school? Because they have great football games. I said, so you're considering over $100,000 in tuition so your son can go to a football game. Those are the things that we need to look into. What school is the most best fit for your student? And what does that school cost? What kind of awards do they generally and historically give to students? And what is the best way for us to get your student in that school if that's the right fit for them? Now we get the best package from the school, hence the discount on the need, and then we figure out how we're going to position our finances and our financial situation so that we can get the lowest expected family contribution.
And like, for instance, the phrase comes to my mind, well, the numbers don't lie. So I fill out the form and here's my expected family contribution is X. So, okay, it is what it is. There's not really much you can do about that. But I think that there's some ways that you would be able to show parents how to shift properly and correctly, shift over some of their resources so that it lowers that effective family contribution, right?
Exactly. And ironically, retirement accounts, they don't count on the FAFSA. They're not considered when it comes to the financial aid calculation or the EFC calculation. But what does count is, are you contributing to your 401k? Well, you know what? That's not yet in a retirement account. So that actually counts against you. Did you save college, save for college in a 529 plan? You know what? That counts against you. So maybe we don't want to continue putting contributions in there. We want to move some of our contributions to other areas that won't count against us.
Yeah, that's a really, and I think that you cannot find that just by doing a quick Google search. It's a customized plan that people want to make sure of how it fits in their personal situation. Because too many times people think, I'll just Google it, and here's what you do. Well, was that correct? Was it accurate? And what did you get the full benefit? Did you optimize that for your personal situation?
Absolutely. And you know what? You can Google what the tuition is for a school. You can probably do a pretty good estimation of what it's going to cost to go there from a standpoint of room and board and transportation and meal plans. What you're not going to get on Google is what kind of aid does the school offer their prospective students? Do they offer good packages or not? There's some schools that don't offer anything. Ivy League schools do not offer any kind of merit aid, which is scholarships and grants. Ivy League schools are going to be your MITs and your really big schools. But you can't Google that information.
Yep. You're right. Okay, so now we're kind of wrapping up with the thought process of wealth building and retirement and some of the advice you give to your clients. What about passing along what you've accumulated? So let's say that your parents, the parents you've worked with, have now followed your advice and they've gotten the kids through college and maximized everything, and they've not, tapped into their retirement to derail it too much. Now, how do they pass along their money to kids without even having to pay taxes?
That's
possible?
That's another good question. Absolutely. And after we figure the best ways to, save and on a tax advantage, using as many tax advantage options as we can, we're considering things like legacy planning. Yeah. Is there a way of passing your retirement savings to your kids without having to pay taxes? Yes, there are several opportunities where you can convert retirement savings into tax-advantaged as well as lifetime guaranteed income vehicles. and with a death benefit that would pass on to your children tax-free.
I mean, I think when people hear tax advantaged or mitigating taxes, they know that those are words where you're being very cautious to go, well, you can't eliminate, but we're going to get it as low as possible. We're going to reduce a little bit, but you're saying tax-free. How in the world can you pass along, like your legacy wealth planning to your kids tax-free?
I specialize in helping people maximize their retirement savings. And I've seen that taxing the seed can bear more fruit in retirement. For instance, life insurance is a tax-advantaged option as it falls under Section 7702A of the U.S. Internal Revenue Code. Life insurance gives policyholders the option to allocate cash value amounts into a fixed or equity indexed account. The idea is to use the policy for the tax shelter rather than the traditional focus on the death benefit. And understanding 7702A tax planning, it allows the harvest to be tax-free with more flexibility and fewer restrictions than even a Roth IRA.
Wow. I love your word picture of taxing the seed, not the harvest. And when you can say there's a vehicle out there like life insurance, I think a lot of people might get confused and go, well, I've got life insurance. I have to re-up every 10 years. It's one of those term policies. But you're not talking about that, right? This is a special kind of a plan.
Right. It is. It's, when we look at cash value fixed or equity indexed accounts, we're not focusing on the death benefit. We're focusing on the growth. And you know what else is cool about that? You can add long-term care benefits to the policies, which can be essential in retirement. Death benefits are tax-free. Beneficiaries are not taxed on the payout. Withdrawals are tax-free in the form of policy loans and a return of premium, and there are no contribution limits.
And so those things you just described seem like it's the opposite of the death benefit you hear about with life insurance. These are really kind of like life benefits, living benefits. You get to take advantage of it while you're still here. And that seems very different than what a lot of people would have in their mind. So there tends to be some misconceptions about the quote unquote life insurance. So when you learn to understand, and you can't just Google and go, give me one of those things. You got to have the right one and set it up the right way and talk with someone like yourself, right?
Right, exactly, yep.
Well, great, Nadine.
There are other options, too.
Such as?
Called tax advantaged. Yeah, as in essence, they're legal tax shelters where you house money and are triple tax protected, meaning that your money is no longer subject to income tax, capital gains, or provisional income tax. So with that in mind, I'd like to circle back around the question, would you rather be taxed on the seed or the harvest? Yeah.
Wow. Yeah. Again, the seed. Yes. I want to pay the least amount of taxes with the most amount of protection. And it's, I think a lot of people would go, well, but how risky is this, whatever, this stock, bond, mutual fund, investment, whatever. But when we're talking about life insurance and permanent life insurance, this is something that's been around for hundreds of years.
Hundreds of years. Yep. Mm-hmm.
In fact, I've heard some people say that, really, when you put your money in the bank and these big companies, they put all of their money, or they put a large amount of their money into these same types of insurance policies. So if the bank is doing it, then you know that it's a good strategy.
Exactly. Right.
Well, awesome, Nadine. Well, it's been so great chatting with you and seeing how you serve your clients. What's the best way that people listening to this could reach out and connect with you and learn more?
You can go to my website, www.nbpinsuranceservices.com, and there's I have a webinar on there. You can click on the link to connect on my calendar and pick a time where we can chat on a Zoom.
Awesome. Well, thank you so much for coming on today. It's been a real pleasure talking with you.
Thank you so much, Mike.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneurssradio.com.